Welcome back, everybody. Another week, another Ask Me Anything happy hour with the BYOB Brady Bunch crew. So get your questions ready. It's snowing here in Buffalo. It's probably hurricaning down in Florida. Maybe it's sunny. Maybe an alligator's eating a kitty cat. Something weird is happening everywhere, but your questions are all we're going to focus on. So get them ready. We will be right back after this. And just so you all know, no animals were harmed in the recording of this video. All right, we are back at it. It's another week, another Ask Me Anything happy hour. We are happy to answer all of your questions. So get them ready. I see a bunch of people piling in. I see some questions rolling in. So while you get your questions ready, as you get your thinking hats on or off, we're going to go around the block and start with Shauna.
Hello. So I'm Shauna. I'm up here in Buffalo up with Chris and Helot Joe, who's not on the call yet. And it just got back from an awesome weekend. My suitcase is still by the door. I haven't unpacked it yet, but it's sitting there, and that's on my to-do list after we hang up this call. I'm going to clean my house and put my stuff away. But it was an awesome weekend event. I actually got to meet Brian Fouts in person, which was cool. I've met everybody else, at least one time before. And so it's just a special time when we get together and solve each other's problems. It's a beautiful thing. Yep. So looking more forward to that today on Ask Me Anything. So pass it over to Brian.
You look so much different without your hat and your ski gear and all your stuff on.
Yeah. Brian Fouts here up. I was actually snowblowing, testing a new snowblower I got actually right before this call. I got on the way back from the airport from the event this weekend. So. But yeah, it was all my pipes are frozen under my house. I have no water. It's great. They burst all the pipes yesterday. Had to replace them all. So it's been a fun. Actually, it was a negative, I think 11 this morning or something like that. So it's getting a little cold. Yeah, I'm not a fan of that, but get everything figured out. But yeah, excited to get some of your guys' calls in here or questions in here. So I'll pass it on down to Mr. Yenny.
All right, Craig Yenny here from the Colorado region, and also was hanging out in Sundance. And I didn't tell you guys this, but on my way home, because I drove from Denver to Salt Lake area, there were cop cars, state patrol everywhere. They had about 8 trucks pulled over, handcuffing these dudes. I'm thinking it must have been a major drug bust, but I didn't slow down enough to go check it out, but I thought that was pretty interesting. So anyway, a lot of fun stuff happened in Sundance, and just really a cool time of people sharing what they're struggling with, and the whole group just contributing on ideas of what they could do. And it's cool because I think there's some people, Shauna, you mentioned one guy has already taken some action, some things. So that's pretty neat. But we are here to answer your questions. But before we do that, we have one more, and it's off to Jason.
Thank you, Mr. Craig. And it was great to see all of you, minus Chris. So Chris, still sad that I missed you, but it was nice to see Fouts and give him a hug, and Shauna and Craig and everyone else. And Sundance is beautiful. It's breathtakingly beautiful up there. And we are definitely going to go back there and check it out some more. And I love connecting with not only everyone here that's here to ask us questions, but all of you guys too in person. It just makes this journey more fun to do it together. We go further together. You can go faster alone. But being here together, meeting Fouts looks just like he does. Like, that's how the man looks, just like that. So, he's like that size. He's the height you think he is. He's not taller or shorter. He looks just like that. So anyhow, it was cool meeting him. The guy who threw me off Fouts was Brent Carlson. Like,
oh yeah,
I just was right at him, and like I talked to him, and I'm like, wait, Brent, what? Like. And then I asked him to burn the bridges, burn all the big clothing, never go back, cut off all exits, and go forward and be better. So welcome everybody. Let's get some questions. We got a bunch going, so let's rock and roll. So
I love it. All right. So Kelly J is saying, I do want to meet with your team, but haven't received any reply. I watched the videos, read the ebook, etc., but I'm unable to book an appointment. And so Drew put the link in the chat. So anybody who is ready to get started with your building your own bank and becoming your own banker, you go to mentors.beyourownbanker.com. And that's how you're going to schedule a call with us.
He did post, Kelly J at 441 just posted some additional things. So you might want to stay
we can do that
for a moment. Yeah.
So I am 59. Only debt I have is around 300K over 300 acres and 3 properties. Have 58 months on a lucrative 1099 contract. Want to retire then. What's best? HELOC, the Rock, whole life, or annuities? And then follow up is saying, considering pulling all of my IRAs in June at 59 and a half and do a dump, what's best? And has lots of savings.
I know this guy who has a spreadsheet, and he's got a spreadsheet for that. This guy's engineer. Like, engineers are my favorite, so carrying over from the earlier fund. But I know a guy, Kelly, who has a spreadsheet for that, and we can definitely help you see mathematically what's going to be the best. And I'm sure there's a lot of other opinions, like accumulation theory building up. And then drawing down for the rest of your life is not what we're going to look to help you do. We want to help you create cash flow because we don't know a lot of things. We don't know how long you're going to live. We don't know what taxes are going to be later. We don't know what inflation is going to be. We don't know what the market is, but we do know that cash flow is something that you can count on. So that is how we're going to look at this problem.
And it depends on the details. I mean, there's a lot of details here we can't quite see, so it's kind of hard to answer.
Well, I have one question. So one thing I read is that he's thinking about pulling his 401k money to do a policy while sitting on a bunch of money in a savings account. So do we want to hit on why people think that they shouldn't do IBC with their savings account money that they have sitting there, or why they would feel like they would want to get started with their IRA money?
Yeah, go ahead, Brian, finish up what you were saying.
So it's all dependent upon what their goals are and what they have and what they're trying to accomplish. That really what is the answer, because and a lot of times I have people that want to put all their savings into a policy and I go through their situation. I'm saying, please don't. I would not recommend that because it's going to put them in a situation that might not be good. I have a lot of clients that are doing what Kelly here is talking about, which is pulling money out of the IRA to put it into a policy as a large dump in, but then they don't think about the tax consequences. All of a sudden they're bumped up into another tax bracket and they're going to take a huge hit. And so we don't do that. So what we do is we might maybe do a higher premium policy or maybe multiple dump-ins over the course of, say, 3 years to move it in slowly so the tax hit is, reduced. So there's lots of different answers depending on the situation and, what you're trying to accomplish really is what it's about. So, but yeah, I mean, that's to answer your question, Sean. I think you're talking about the 401k. I mean, it depends, their situation. If you're still with the employer, if you're not with the employer, that's going to change how you can do that. So you got to really understand sort of those different factors. So Kelly says that's a prob 350K annual pay. I'm not sure what that means. That's your annual income.
Yeah, that's a 1099.
Yeah. So if you have the 1099 income, but you're going to retire in 58 months, you've got to understand that the premiums are going to maybe extend beyond 58 months. You got to understand what that looks like after you retire.
But actually, to that, like I think this is a really not knowing a lot of details. And like you said, Brian, there's a lot to be asked on a call. But I think it's a pretty easy solution. The beauty is Kelly's got one heck of a good 1099 for 58 months. That's almost 5 years, right? We almost got a 5-year runway, a little less. So we've got a lot of time to get prepped, get ready. Sounds like Kelly knows the specific goal. Retire, travel, and enjoy. So what we'd have to find out is, okay, during retirement, what does that income look like? Where's the income going to come from? I'm probably against moving the money out of the IRAs just to dump it into the policy. I'm not fully saying that that's not a good strategy, but probably not moving at all because, again, the tax consequences, you'd bump into a higher tax bracket. You're already high income, so you're already, probably getting dinged pretty good on tax rate. But then if the year you retire, 59 and a half, or that, I don't know if that's when you retire or if that's sooner, you're going to bump that tax rate way up by taking the money out. There might be a better strategy using self-directed IRAs and private lending to get a better return. But I think we'd need to establish what is the income you need to retire and kind of sell off and do the things you want. And then we got to look at how much is in the IRAs, how much is in the savings accounts, and then what are the ultimate goals. Maybe putting it all into the policy isn't the right choice. Maybe a mix of different things so we can create some income, some stability, some liquidity, all those things. I mean, there's just a lot to be wondered here, but I think it's a super fun case just from the surface of looking at it, because number one, you've got the income, over 58 months. So we've got a lot of leverage to do a lot of things and get the planning ready so that day comes, you're ready to go. And then it's just finding out how much goes into the policy. What are we going to use the policy for? You don't really have much debt, and it's land with property. So is it even worth paying that off? We'd have to run the math. Again, Craig's got a spreadsheet for that. And then you had mentioned annuities earlier. I mean, the only fit I would see for annuities would be maybe income annuities to provide a guaranteed income, like a base income. You might say, all right, I need this much every month, no matter what. Maybe the annuity fits there. Maybe it doesn't. Maybe you're saying, okay, well, I need that income, but I'd like to get a better return than a fixed or an income annuity would provide. And then you can look at really safe private lending deals or other situations or things like treasury bonds. I mean, you got the wind against your back. You got a nice tailwind going on here, at least for 58 months. So I think the best thing to do here, get a call booked, and then let's really dive into the specifics about what you've got going on, what it is that you want, your needs and goals, and then just reverse engineer it and get started today to make that happen in whatever that time frame is, 58 months.
That was a fun way to start. This is a nice educational piece for anybody who's watching. And congrats, Kelly. You're in an amazing place. Like, we talked to a lot of people, and I can tell you that the amount of money that you're saving, the fact that you have both qualified money, you have savings money, you have income coming in at a high level, you have a lot of opportunities. Like, if you believe like I do, the wealthy have more choices. Like, does that feel fair? And like what Chris and Brian and I'm saying, and everyone, Sean, everyone is saying, is that getting on a call, having that big vision in mind, and then drawing it back to the current point in time and being able to attach those two things will get a plan for you that's going to help you take action to make the best steps you can based on the information that you have and we have. So
yeah, and I would certainly say on that one note that Kelly just said about selling the property, if the property is not serving your end goal, definitely like get it on the market. I mean, who knows how much longer we have this strong real estate market. It's not quite as strong as it was, but this would be a good time. So, $1.5 million, if that's what you could get, minus taxes, if there are even any tax on it. I mean, you're talking about literally that could be $180,000 a year right there, just from that 1.5 million. Just starting to think income, with assets. You got 1.5 from the sale of that. If that money went to work, in private lending, super secure, like not even the higher, not striving for return, just going for super safe, consistent deals. That's literally $180,000 a year paycheck for you, $15,000 a month. So let's say we're trying to replace $350,000, which sounds like that's your 1099. Dude, we're getting pretty close right there, and not even knowing what the rest of the assets are. So again, you worked really hard, and this team is absolutely capable of solving all of those problems, even if it involved stocks. If you wanted stocks in there, by the time you're there, we'll have solutions for all of that as well.
Yeah, I was just going to add, so Shauna, you posted the video I just put in the private chat. So Kelly, I would highly recommend you watch that video. That was a session that Chris did on retirement strategies, where there's a concept of volatility buffers, covered assets, and it's using whole life and annuities and your qualified accounts. It was one of my favorite webinars because it solves the retirement challenge with, when the market's down, you can go tap into whole life, as your retirement. So that may give you some ideas before you book a call, just to think about where would a whole life policy fit? Where would perhaps a single premium immediate annuity or a deferred annuity with income? So there's a lot of really cool things you can do to stitch that all together. But you have assets. It's just a matter of how do you position those like chess pieces on a board to win.
I think it's going to be an easy puzzle to put together and a really fun one.
Yeah.
What do we got, Sean?
All right.
So Shane is saying, if I were to look at doing a dump in and set up a policy that can grow with added future cash flow, then what split would be the best to look at? Basically giving more space for future income growth.
I want to jump, Shane. I love it. I mean, it's going to be an it depends question, but like if you're looking at depending on how much the dump is compared to what the premium deposits are, that'll tell us kind of what company we can go to. But then when you're looking at the split, if your dump is big enough and we can do the split, you might want to have like 50% of the base. Like we've seen those be really, really productive, because that means with some of the companies we write with, right, you can do 3 times the base in years 2 and on. So that's going to give you the ability to put more in and paid up additions and different things for longer term growth. So you can kind of accomplish both, have your cake and eat it too, is the way I'm thinking about it. So.
Yeah, I mean, heck, if the dump-in is big enough and proportionate enough to the recurring premium deposits, you could pretty much dial it in anywhere you want. I mean, that's the beauty is when we get into that design phase. And Shane, you know this, we've done other stuff. Is we really can kind of just look at it and just play around with it until it's the most efficient. So for us to sit here without knowing numbers and say, oh, this is the best design. I know that video, how to design an IBC policy updated, kind of breaks it down into the 4 plus the rock, but there's way more than 4, because we can dial in and do so much based on that particular individual situation. When I made that video, I just tried giving like a roadmap to people so that they kind of had a kind of visual view of like what each of these do. But it always comes down to like the team doesn't just look at it and be like, oh, this is a Slayer. Oh, that's a rock. Oh, this is, we literally look at the situation first, the needs and goals of the client, and then we reverse engineer the design, and we just make it the most efficient possible. I mean, that's how they're all designed. So I think that it's basically just a matter of just let us play with the thing and tell us what you're using it for. I already think I know what you're using it for, but just give us, if it's different than what the plan was that we spoke about, let us know, and we'll design it to do exactly what you want done. This is where I need to get that background music going for those.
Jeopardy music.
Edwin is saying, hey guys, if I become a member of the Money Multiplier, I know there is a fee that comes with it. Is it a one-time fee or monthly? And the next question, do you do training on how to lend money, like contracts, etc.?
Well, are you referring to Private Money Club or Money Multiplier? So
it looks like both.
Yeah, there's no fee to working with us. So no fee to be part of the Money Multiplier and be around a campfire or do policies. And by the way, I've had some clients, this is months ago, that were doing infinite banking, wanting to do it. They came to us, Chris. They saw you or something, or saw somebody, came and said, "Oh yeah, I'm working with the other firm over here. They were charging $5,000 up front just to go through the process." If you hear that, my opinion is run away.
Yeah, agree. Second that.
Yeah,
run.
And I knew who the group was. To be honest, I knew who they were, and I was like, "Yeah, run away." So that's that part. And then Private Money Club, yeah, there's a annual membership fee for that one, but I'd reach out to them directly if you want to know more about that.
I have something I'd be remiss not to. It's too funny not to play this. So can I just play like something really fast?
Do it.
I can't not. It's too good with the run thing. I'm probably thinking this is going to be more fun than it's actually going to be, but we're going to try.
What's up, guys?
There's Snaggy. There's a lot of anticipation. Here we go.
Stacy, come here.
There it is. All right, that's all. Sorry. Should have timed it a little better, but that's a cute scene. My daughter loves that movie.
Yeah, I love that one too.
So Jared just thinks he's not qualified to be listening to us, and I think you just corrected him that he is.
Yeah, I think you just helped him. I think you just helped him feel at home.
Jared,
all my knowledge from Boss Baby.
Right over his head. He's like, I'm back, baby.
Oh.
Did we finish
Where did
the
that question go,
admin
though?
question?
I don't even know what we were talking about. I was really enjoying
Okay.
that movie.
A couple things though that we didn't hit on it. So there's not a fee that comes with working with or starting your own bank, and I heard it said through somebody that that the agent.
Well, I think what we didn't talk about was PMC.
Right, but that the agent gets paid from the insurance company because whoever on your screen is going to be working with you is bringing the insurance company a client that insurance carrier would not have without these people on the screen. So they get paid from the insurance company for doing a great job and serving them. They're getting paid from them and not you. And then there is a fee that can come with coaching and learning how to lend money.
Yeah, well said. And then on the PMC side, Private Money Club, we definitely do training. One of the best in the industry. It's called the Accelerator, the PMC Accelerator. And that training will teach you how to literally never miss a beat when it comes to lending or borrowing, because, you know, some people are like, I only want to learn how to lend. But in order to lend properly, you have to understand how borrowers borrow. So the training is really geared on both sides, but done, you know, so that both sides of the coin, lender or borrower, learn how that works. It's very affordable. You know, and you can kind of bundle it in with a subscription to PMC's Premier and the certification course. So you can kind of dial in, Edwin, whatever you want out of that training and that coaching. And Noah is the lead coach for PMC. He crushes it. He's literally, just look at his testimonials, look at his reviews, you know, off the charts. So we can put that link up over there if you wanted to book a call and kind of talk about different options for the private lending and the how-to, the coaching around that. But around the Money Multiplier, BYOB stuff, yeah, there's no cost. We pretty much give our best stuff away for free.
Steve is saying, is there such a thing as a joint IBC policy? If so, can two people make each other beneficiaries of the policy?
Not quote unquote a joint IBC policy. You could do what's called a survivorship policy, which has I'll just pick on a husband, wife, just as an example. Like you could have a husband be insured number one, wife insured number two. So you could have two insured bodies. The policy doesn't pay out until the second to die. So survivorship second to die is typically what they're called. And what that does, it spreads the risk for the insurance company over two lives. So it reduces the cost of insurance, but that's really only used in estate planning, you know, because obviously estate taxes are triggered upon death of second. So if husband passes away, assets transfer to spouse passes away, assets transfer to the children, but trigger estate taxes. So that's a second to die or a survivorship. So, but on the other side, you could have a policy where there's an owner in you could have technically one owner, but then a successor owner, but you can only have one insured unless you did that second to die. And then on the beneficiary, you can name as many beneficiaries as you want.
And Chris, I didn't know what the survivorship policy, second to die, is. Can you structure those for IBC or no? That's just for
Sure.
estate.
Oh yeah.
Okay.
No, you can make those things really scream pretty good. Me and Craig have played around with them. You can make them look really good from a cash value standpoint. But again, we would never, from a suitability standpoint, a compliance standpoint, you would never do a second to die survivorship, you know, unless there was a need for that. You know, you wouldn't just design one of those because of cash value. You just do an individual policy like we always do. There would have to be like an estate planning need or a reason why you'd want a death benefit paid out on the second to die versus just, you know, a regular death benefit on the insured of the policy.
Very cool. Thank you.
Keto Karen is saying 57 years old, no savings, make about $1,000 a week, about $30,000 in debt between car, credit card, and a loan. Wants to buy a house and retire someday. Is it possible?
Heck yeah. The thing that's not answered here though, because $1,000 a week, that's a decent income, but like, are you able to save money, or is that $1,000 all being spent every week on living expenses? Because the biggest thing here for Keto Karen would be like the gold, you know, the wealth that is missing in your life to help you retire and get to where you want to be is in that debt. You have $30,000 in debt, car loan, credit cards, credit cards, and then the loan. Like, the thing to do would be to add up how much you're paying to all of those, and then just think, what would your life be like if all that money you're paying to those debts was paid back to you? And then make a commitment that you're going to save first, so that you can then pay the debts off and build wealth through your own debts and expenses. That would be a really cool scenario. And the only reason you wouldn't probably get a house, I don't know if the $1,000 a week is W-2, 1099, or how that's reported, so that's a factor. But the only thing here that's probably hurting you from buying a house is the debt, your debt to income ratio.
Well, the thing is, Keto Karen, when you start looking at this plan, we'd really have to have more information. But the $1,000 a week, is that going, like Chris said, is that all going to expenses? You have no savings. Can you get some savings? And if not, we'd also look at your debts. So, for example, say you've got your car, your credit card, your loan. Are you overpaying any of those loans? Because that could be possible funds that we could use to run through a policy first. So we've got to find some cash flow to run through the policy to start building cash that we can use towards your debts, recapture. So we have to get some more information about your cash flow, your bills, your expenses, and then we can put a plan together.
And this might be, and I love everything that, pouring all this into Keto Karen, this might be something where you're looking at velocity banking first. Like maybe that's the introduction to free up more cash flow to start a policy, or maybe there's a way that you can earn more, right? Like you have so many possibilities. Like when you ask, is it possible? It's more like, how can I do this versus is this possible? It's a change in how you're thinking about your situation. Because you're here, right? You're here getting knowledge. You have the opportunities you're sharing with us. So I believe, like, go listen to The Strangest Secret in the World. That's one of our team's favorite, Chris's favorite. He's always quoting it to us. But go look at that, and once you know your destination, everything's possible. So,
yeah, thanks for that, Jason. I put that video in the chat.
Thank you,
Mama Bear. Love to listen to that.
Yeah, and the thing with debts, a lot of people that we talk to, they're just paying them off one by one, meaning when credit card one's paid off, they'll take that money and go blow it. Maybe they buy more crap, or they go out to eat more often. And if you start doing either like a snowball or an avalanche or a cash flow index type of a model, you start picking those debts off and rolling those payments into the next debt instead of spending it. If you do that, you'll get your debts out of there faster. And then once you get to a point where you can start saving some, that's where we come in, is we can start building out plans for that.
Cool. Kelly is saying, how do I use my policy for just monthly expenses to be used?
Well, that's kind of a question that comes up a lot. And I always explain it this way. You have banking functions and banking transactions. Transactions are your monthly expenses, paying bills, cashing checks, doing that kind of stuff. Banking functions are the borrowing and lending of money, buying cars, things like that. Infinite banking is more about the banking functions, not the transactions. So for me personally, I separate those two things out. I'm going to use a traditional bank for monthly expenses, things like that. I'm going to use my infinite banking for the borrowing and lending of money, investing, paying off debts, things like that. So that's my first kind of answer to that question, is that keep those two things separate.
Also, it's because we were just talking, with Kelly about, the situation. I definitely would not ever, at least not for the first 10 years, maybe even 15. I would never use my policy to pay basic expenses. I would have somebody else paying my expenses for me. In other words, putting money in the policy, I'll just pick on lending, take that money, lend that money out, take the income from lending it out. Now my money's working for me, and use the interest paid on that money to pay my household expenses. I mean, literally, most of this team knows it's exactly what I do, because it's way more fun, fireside chat, when you're talking to people and they're just like, hey, how things going? I'm like, great. Everybody else pays all my bills for me. What do you mean everybody else? A bunch of people that I lend money to, they just pay all my bills. I don't pay anything. They just pay everything. Like, that's just fun conversations to have. So that sounds like that's going to be the conversation you're going to want to be having, because you have the means to do that. I can't say that would work for everybody, but that would be the route I'd go.
All right, and he said, okay, my appointment is in. So he is on the books. Okay.
Now, just for anybody, just remember, Craig's probably going to have to pull out the fancy dancy spreadsheets for that one. So make sure you involve Craig in that. Just anybody that has that call, like, just please, Craig's got to be involved in that one. We're going to have to run some, like,
I'll run some numbers.
Spreadsheets on that. I can't wait, Craig, till we don't have to call them spreadsheets anymore.
Well, that day's coming. That day is coming.
Volu is saying, what is good to invest in?
Oh.
What would you invest in, Chris?
Yourself. Best investment on earth. Invest in yourself.
Yeah.
And then after that, I mean, there's things like treasury bonds and private
Good
lending.
snowboard,
And
never hurt.
anything that you know, like, and understand.
And I think that's the key. Whatever you know, like, and
Probably
understand.
was not liking that answer.
It just depends on your needs. Like if you're starving, it might be good to invest in a fishing pole. Like if you need cash flow, you might want to invest in private lending deals where you get monthly cash flow.
But if you buy a fishing pole, Steven, you got to have worms and bait. Like I've tried fishing with Vivi without any bait. You don't catch many fish.
you go look under a rock. That's the beauty of the.
I did, man. I walked all around, couldn't find anything.
Oh, you're a little pretty boy snowboarder Buffalo guy. So
Kidding me, man? I know how to find
Brian
worms.
Fouts. Brian Fouts down there being a man, putting pipes together and stuff.
Man, I'll just dive into the lake and come out with a fish in my mouth.
Yeah, Fouts, I've been worried this whole time. Did the shampoo ever come out of your wife's hair? Like after that happened yesterday?
Tell her just shave it like you. She'll be all right.
She was literally she went and got some snow, melted it on the stove, and rinsed her hair off in a pot. I kid you not.
I
That's what
like
we had to
that.
do.
Wow, what a family, man.
Yeah.
Fouts family. If the world's ending, go find the Fouts family. They've got your back.
All right, we got a lot of questions.
I know. I hopped on. You guys were on the question from 441. It was like.
Listen, I'm trying to star. If someone can go star them,
God.
I'll keep going. MJ is saying, what do you need to do if you want to open a second bank, be your own bank account, like a second policy? What do you need to do if you want to open a second policy?
Same as the first policy. Have your goal in mind, schedule a call, and get going.
And I think you should only open a second policy when you've maxed out and are really using your first policy to its maximum efficiency. I think a lot of people feel like they need to be in a race to have more policies to keep up with the Joneses, but that's not the case. Each policy should be started because you need the capacity to, warehouse more of your capital and more of your income. And then to do that, your first policy is completely utilized and efficient.
And we talked about it a little bit last week, but a couple things to consider is spacing out your premium payments so that you can manage both of these policies at the same time in conjunction. So however that looks, quarterly, monthly, annually. And then also just a lot of us have multiple policies with different insurance carriers. And so if you have one policy with one carrier, then you get started with us with another carrier, there's nothing weird about that. That's just part of the game. It's whatever is best for you. Sometimes that looks like a different carrier. Luke is saying, if someone has high income but high expenses, is it possible to put all your money in the policy first?
Simple answer, no. Simple answer. I was going to say no right off the bat. Can you? Potentially. Should you? Once again, no. So the reason why is because if you have high expenses, just like food, clothing, groceries, things like that, are you actually paying interest on those things? No, in most cases you're not, right? So you would not want to go and do something that incurs interest on those things. It's kind of one way to look at it, but yeah, that would not be a typical recommendation for most people.
And you wouldn't be able to put all of your income into a policy anyway, because the insurance companies aren't going to approve that. So there's always some percentage of your income that they'll allow you to put into a policy. And you've probably heard of people that have eventually run all their money through a policy, but it takes years to get there. It takes many, many years to get there.
Yeah.
So
another way. Go ahead, Greg. Sorry.
I was going to say you wouldn't be able to do that in the first place, but like Brian was saying, you probably don't want to be running money through there to pay for expenses anyway. To pay down debts, yes, but just to buy groceries, there's got to be some better things to do there than just buying groceries.
And I had a client ask us here one time, why? Well, insurance companies are extraordinarily risk adverse. They do not like risk. And so if they're not going to let you do something, it's because they view it as risky. which means you probably wouldn't want to do it, because if the insurance company thinks it's risky, then it probably is risky. So that's why they limit you on certain things, because that's how they view it.
Definitely not willy-nilly. And
Yeah.
Luke, I mean, it's like looking at Parkinson's law. It's one of the things that Nelson talks about in becoming your own banker is, you have to make a certain amount of income, and then your expenses are here. What you're saving here is that's the one change. That's what's going into a policy. And so like, maybe it's just financially, like Craig was saying earlier with another question, just writing everything down. Are you overpaying on any debts that you might have, or is there things that you can cut out of your lifestyle right now if you have the goal of doing this? And then really really level set where you're at, you're starting to save some money, because you're earning high income. You've solved the first job of making money. Now, how do you keep more of it, right? So.
Okay. Kelly's saying HELOCs, are they needed if you don't have bills, really?
Well,
I love
HELOCs. It's a tool. So it's just a tool. So it depends on how you're going to use it.
So, and there's different types of HELOCs. There's the HELOCs that most people get where you have a mortgage, then you go to another bank and you get what's called a second HELOC or a second lien HELOC. That's what most people do. But there's also first lien HELOCs, which are very flexible, where your HELOC is your mortgage. And that's what we talk a lot about, is a all-in-one mortgage, a first lien HELOC. But if you think about, so Kelly, think about it this way. If I've got $300,000 of equity sitting in my house and it's just sitting there doing nothing, what if I were to take some of that and put it to work to make more money? And that equity is going to be working for you to either pay the house down faster, to create cash flow for life. So HELOCs are great for velocity banking, but they're also great for building more wealth, because you're putting that lazy money that's doing absolutely nothing for you, and you're putting it to work.
And even, I've heard you say this too, Craig and Kelly, even if you didn't have a need for, or you weren't ready to lend because you didn't understand what you want to invest in, having the HELOC gives you the option that if for some reason you need the money, it's there. Like, it's not locked up where you can't get it. If you got approved, you could use it if you needed it. So.
Yep.
Okay, so earlier, Jared, I mentioned this, as he's saying he doesn't feel qualified to even be listening to us. He enjoys it, though, wanting to learn all that he can. And he doesn't really have a great plan, but have a $450,000 house, about $296 on it, and 26. I'm wondering if he's 26 years old.
I think it's 26 years left to pay would be my guess.
Ooh.
Okay.
Yeah, equity, that thing. Yeah, I would lock that equity down with the HELOC and start understanding how you can use other strategies to pay that thing off quicker, faster. For sure.
Okay. And Jared, definitely stick with us. We're here for people who don't feel qualified. So don't leave. Rob is saying, where can I find out how much the interest rate is and the dividend rate that I'm earning on my policies, and how much interest is charged on loans? I don't see any of that in the policy documents.
So what I would say to this, and Rob, I don't know if you're part of our community, but you could reach out to your implementation specialist or your agent, and they could help you out with that. But you should have a portal to log in at the insurance company, and they're typically going to show you what your loans are, what your loan interest rate is. And if that's not the case, we can call policy services, we can get your implementation specialist involved, but we can help you get that figured out. And it's going to depend on the company as well.
And depending where you're at, like if you're looking at, I don't know if you're looking at your illustration, which won't show you these things. Like, it's not going to show you the guaranteed contractual interest you're earning. Depending on the company, it's not going to show you the dividend you're earning on the non-guaranteed side. And it's definitely not going to show you the loan rates. But once, like Craig said, once you have a contract, it'll start showing you some of the things, but it's typically not until you have your policy in force that you're going to see the loan rate. So just depending on where you're at in the journey, you're going to have different ability to see what's going on. But just, and to speak to what you're asking too, when you're earning a guaranteed contractual rate and you're most likely going to get a dividend, that is compounding interest. So when you have simple interest, depending on how you finance for the loan, depending on how you finance things now, you're always going to be ahead if you're compounding your money in this hand and you're borrowing in simple. Like that's always better than the amortized loans or like the schedule that was just shared. I think it was by Jared, right? For the 26 years left on his mortgage. And like, I didn't want to tell you, Jared, don't go look at how much is going towards the interest because you're within that first 7 years. Right. So.
Yeah, Jared did mention he would like to get his mortgage paid off first within 10 years. That's one of his goals. Actually, just to stick with Jared real quick. So he's saying, what's the best whole life to start with? He's 44 with 4 kids, ages 3, 9, 17, and 20. I'm going to only have the 2 at home at the end of this year.
Yeah, let me just throw out, like, paying off the mortgage. It sounds like a good goal. It might not necessarily be the best financial decision. There could be better things that you could be doing with that. So we can kind of walk you through that on a call and maybe use some tools to kind of project out some different options for that. So just keep that in mind. Have an open mind, I should say, about that.
And as far as best whole life to start with, it's really going to depend on what your goals are, Jared. And, you know, if you're the one that's the income producer, it's going to be protecting yourself first and using that policy for whatever your goals are based on you first, especially with 4 kids, and then go from there. You can expand your system as you need to.
Yeah, I agree. Definitely getting protection on Jared is the most important thing, and getting him, you know, a mechanism to put money into that gets that money working, but also provides the protection needed.
Okay. Right, so Victoria is saying, so guess my question is, how can I use the money my friend loans me to purchase the property and help pay her back as me being my bank? So how can I use the money my friend loans me to purchase a property and help me pay her back as me being the bank? Sounds like your friend is the bank to me when I read that.
Her friend is being the bank. So her friend lent money, it sounds like, to purchase a property, and she's trying to pay her friend back by being her own bank. And both sides can be. I mean, you know, her friend lent her money. I don't know what interest rate, but her friend's being the bank. And then, you know, Victoria could literally set up a system, you know, and repay her friend in an effective manner. There's really not enough information there to make any kind of definitive statement about how to do that outside of that's worthy of a call to figure out like what the circumstances are and how we can build something that will do exactly what you want. A lot of questions on that one.
Mm-hmm. Steve is saying, after starting an IBC policy with one of you, is fees charged monthly?
Yep, $1,000.
Well,
that's Brian's fee.
No, there's no fees. No, there's nothing that we charge. It's just the premiums. That's pretty much it. That's what you got to focus on.
Yeah. The premiums, you know, if you did monthly premiums, that premium is going to include your deposit into the paid up addition rider, which is the cash value component, if you will. Then there's the base part, which is the death benefit, but later also a major contributor to the cash value growth. And then depending on the policy design, there could be a term rider on there that's going to have a cost of insurance. But so your basic expenses for the policy are going to be policy service fee one time per year, $50 or $100 for the carriers we use. Then you got your cost of insurance, which is the cost of insurance on the base and also the term insurance. And then there's the commission. But again, the way depending on the design we do for your policy, that kind of determines the commission. And usually it's between 60 and 90% less than what a normal commission would be on a whole life. But again, don't know what your policy looks like, but that's the fees inside of the policy. But for us to administer it, for us to implement it for you and everything we do, there is no cost, like Brian said, unless you want to, voluntarily donate $1,000 a month to Brian. But Brian probably should set up a foundation before you do that to make it legal.
Victoria came back with some more details. If you need anything else, so she said the amount is $475,000 for the property.
Yeah, that doesn't, like, there's probably 20 minutes worth of questions on that one.
Okay. So Lewis is saying, I just got a HELOC and I have $50,000 that I would like to open an IBC with. I was a Dave Ramsey follower until I started to learn about velocity banking and now infinite banking.
The bird was let out of the cage. They ran
Right.
you, let you
I
out.
like that, Chris. I like that.
I would like to learn more about how to open an IBC and what my options are with a $50,000 HELOC.
Lots of options. I've done a whole bunch of videos around that exact topic on Christy Vans and also my YouTube channel. But yeah, that piece cake, we do this almost on a daily basis, what you're talking about. So again, I hate to keep saying book a call, but like this is an easy one. You just need to know a little bit more about your needs and goals.
And congrats on being out of that cage. That's super cool.
That is really cool.
Yeah, and we got a lot of questions today, and someone saying the first time ever being able to join Ask Me Anything. We have a lot of questions today. They're awesome, but definitely just continue to come back and keep asking these questions. If you feel shy about asking the same question week after week, don't, because there's been people that do that all the time. So come back, ask the same question week after week. We might call it out, but don't worry about it.
No, we probably won't remember, Shauna. I'm pretty sure we answer the same questions every week, and it always seems new to me. So,
all right, Andrew saying, first time I'm able to join Ask Me Anything. Any order of operations recommendations? I'm working on getting a first lien HELOC now and want to start IBC. Is there best practices or things to consider?
Knowledge. Just start gaining knowledge. Obviously, the YouTube channel is one of the best places. The Nelson Nash's book is a great starting place. But yeah, gain that knowledge, and then obviously, as you start having questions, schedule a call, and then we can help you walk through that process.
Yeah, and part of what I'm thinking about is you now have, let's say you've got the first lien HELOC, you've got policies. A lot of the times the questions come like, how do I run my money? Where does my income go? What do I do with the money in the HELOC? Where does it go? And so there are some different strategies depending on what you're trying to accomplish. So for example, if you're an investor and you're going to take funds from the HELOC, you could use that to start a policy. The funds from that policy could go into your investment. The money from that investment that it's kicking off can come back into the HELOC. The HELOC then pays the policy back in terms of loan interest as well as your premiums. So there's a few different ways to structure that. But the cool thing is you'll now have those options of the HELOC, the IBC, and I just consider those all warehouses of wealth that you can use to do a job. Now, if you're paying off debts, that would be a different strategy that I would use. So some of it's going to depend on what you're trying to accomplish with your HELOC and your policies.
And as long as you've seen like at least the 90-minute presentation about infinite banking, we definitely say at any point you can, after that, you can have a call with our team. So feel free to do that. Okay, Steve is saying, after setting up an IBC policy through you guys and making premium payments monthly, how many years do your commissions get paid for the policy, if any, and what is the commission based on the face amount?
That's a lot of questions there.
A lot of questions, and I'll be transparent. You'll probably get an answer from this team about that you wouldn't get that answered by anybody else.
Yeah,
that's my 2 cents.
Craig, do you want to answer that one on the how long they pay
Sure.
out?
Yeah, so let's say, for example, you're putting $10,000 a year into a policy. And if you go down the street to your handy dandy corner store life insurance guy, they'll take that whole $10,000 and put it into the base of the policy, and they'll probably make $9,000, maybe $8,000 commission on it. When you come to us, we're going to take that $10,000, we're going to carve it up into 2 pieces. Part of it is that base because it is buying life insurance. Another part of it's going to be a special rider, which is called a paid up additions, or what we consider the cash rider. Now, do we get paid on the base and the paid up additions rider? Yes. Do we get paid more on the base than the paid up additions rider? Yes. Isn't it true that we're taking the base portion, we're squishing it way down, so we're probably losing 60 to 70% of the commissions on the first year? That's correct. So we might get, I don't know, maybe 50% of that base portion. So let's say that out of your 10,000, we're going to put, let's call it 3,000 a base. We'll get maybe $1,500 commissions on that year 1. So you compare that $1,500 to the guy that just got 9,000 that set your policy up the wrong way. So you can see how much we're giving up in commissions by setting these policies up this way. The second part of that is how many years do we get that? Well, the first year is really where the biggest commissions come from. And then after years 2, 3, 4, and sometimes up to year 10 or 11, it's about, call it 1 to 2% of your base. So it's very small. But the reason the insurance companies do that is they want to give you something for the ongoing maintenance and support of your policy. So hopefully that helps. It's a pretty big dive when we design the policies the way we do. It's a pretty big cut to the commissions, but we do it because it's the right thing to do for infinite banking.
Yes.
Craig, and thank you for going so detailed. I was going to say, Chris has a video, his second most watched video of how he lost $534,000 doing IBC. So Steve, go watch that video. It says what Craig just said, but it takes 20 minutes to do so versus like 3 minutes. And also with that, like we do it, like Craig said, because we have to solve your problem first, but we do it because, for us, 91% of the people that we help come back and will do an additional policy in the first year. Because once they learn that they can do this, then they're going to go protect their spouse and their kids, and they build their systems. Once they understand how this works, and like, oh my God, it is true. It seemed too good to be true. It's too good to be true that you're going to give up all this commission. But we benefit when people start doing more and more. That's how we're paid, right? So.
And we benefit by reaching more and more. So we have to make an effort to serve as many people as we possibly can. And then Justin is saying, hey guys, came on late. How was Sundance?
Snowy.
We got rained on, we got snowed on. People threw snowballs at us in the hot tub.
It was a little chilly. There's an owl on the loose. Kept hearing them hoot.
It was good.
It was a great weekend.
I think Brent Carlson bought the entire gift shop.
This is true. I think he's finally committed to his new size that you were mentioning, Jason. So he's out there buying all sorts of shirts and hoodies and stuff like that.
Oh, that's the coolest. That's the coolest.
Yeah, so he's finally, like you said, burning the boats and that. But it was a great event. It's crazy efficient. Like it's like every minute there is something to do, somewhere to go, some place to be. And we did these hot seat things, which was really magical to see just somebody be vulnerable and really just say, these are the things that I'm struggling with. And money is a very personal thing. So a lot of the problems were very personal problems and very deep and stuff that keeps one sole individual up at night. And they were surrounded by 28 other people in the room that were just speaking life into the solution. And that was awesome to see. All right. So I can't really, whatever this name is saying, do you guys do work in Canada?
We have partners in Canada. Yep.
Yep.
So.
Yeah, we do not work in Canada, but we have a trusted source in Canada that can help you with infinite banking up there.
So what do they do to get a hold of us? Would we just have them contact you, Stephen? Is that the best way to go? Or
yeah, just shoot me an email and with your contact info and what province you're in, which is going to be great once we take over Canada. We can just call it all states now. But
did you guys look at the Google Maps, the Gulf of America?
Yeah, I saw that. That's cool. That's funny.
Like, wow. I mean, he laughed the first time, and then I looked at Google Maps, and it was actually Gulf of America. I was like, wow, okay.
Yeah, I'm sure it does. I'm sure it still says Gulf of Mexico if you're a Canadian resident, but fine for us. Lori is saying, can you lend from a Charles Schwab Roth IRA to an LLC backed by a promissory note without getting taxed? I do not know that.
We are not CPAs. We are not financial advisors. So before anyone answers, I'm just putting that out there. So
if you're
they did change it to Gulf of America on Apple Maps now too. we checked this morning. It was on Google Maps, and then Apple Maps just fixed it too.
So to answer Lori's question,
Oh, sorry, Lori.
I've done it before, but you need to go through an attorney. Because you got it, or CPA that understands the tax issues and stuff, because there are rules and restrictions around that. But yeah.
Yeah, and you can't personally use that property or whatever you're loaning on, so it can't be a personal use as well. But I think a lot of it's going to come down to the custodian that holds that IRA. Do they allow you to invest in whatever you want?
What's a Charles Schwab?
Charles Schwab.
Schwab.
Oh.
I'm guessing.
Man, you got to read between the lines there, Snaggy.
The answer is no, you can't. Charles Schwab does not allow private lending. You have to move it to Horizon Trust.
Yeah, so you'd have to move it to a different custodian, a self-directed IRA, and then you can, most likely do that motion.
Yeah, Horizon Trust. Just email me. We'll hook you up, Laura.
I've got to hop the phone, guys. I got to hop.
Okay.
All right, Brian.
Good
Good luck.
Hope you have water soon.
Yeah. Me too.
Watch out for the polar bears.
Seriously. And the Canadian.
Yeah. The Canadians, eh?
We're not worried about them. Who let this guy on?
So the answer is no. You have to roll it over to a different custodian.
You would have to go to a different custodian because Charles Schwab is going to let you invest in market-based things, and that's about it.
Okay. And then without getting taxed, I'm sure that you're going to have to pay tax on whatever it is that you're investing in and making in general.
No. A Roth IRA is tax-free growth. So just do it right, put it through Horizon, do it the right way with the direction of invest form or a checkbook account, and you're good to go. No taxes.
Sweet. Okay, Mike Dolan is saying, I really appreciate you all and love the content. I have policies for my children and I'm looking to use policy loans for an investment. Would you have any investment recommendations? No.
Yes, privatemoneyclub.com. Get educated and go at it, man. Go at it. Seriously, though, that's the truth right now. I mean, good luck investing in this stock market right now. No. Be smart about this.
Yeah, if you learn private lending, it's so powerful. And especially if you're busy with kids and life and you don't have time to do active real estate, it's a beautiful way to build wealth in a safe way.
But disclaimer, we do not give out investment recommendations.
You have to say it faster like a lawyer.
Juan is saying, do you guys have someone who speaks Spanish? I want to learn about IBC and is in Salt Lake City.
See.
Yeah,
Keep going.
That's all I know.
But you do, right?
We do.
Yeah, I don't know about in Salt Lake City though.
We have Gabe and some others that and Jason. I think you also can. Doesn't your wife help out with that?
Oh yes, I know someone quite beautiful that can speak Spanish. Yes.
Yeah, so we do have some resources.
Okay, and then Matthew Diana is saying, I learned about how you can get a credit line connected to your cash value in your policy. Can we elaborate on this? It's blowing my mind.
It's called a cash value line of credit, and essentially what you're doing is you're taking your policy and doing a collateral assignment of that policy to a bank who then gives you a line of credit. And it's typically you're giving up some flexibility there, so it isn't something I'd always do, but there are situations where it does work well. Like Chris uses those because he's got so many different policies with so many different loans. It's just a one-stop shop where he can collaterally assign all of his policies to a bank, and then just have one payment coming in and out. But it's just a way for the bank to essentially hold your life insurance policy as the collateral and give you a line of credit, and there you're off to the races with it.
And I know someone like Chris who has, I think Chris or Brent even, who has like multiple policies, like over 5 or 6 of them. Chris prefers using the line of credit because he can put like all of them and get one line of credit that's connected to all those different policy cash values. So it makes it simpler for him in that way.
And Matthew, it kind of depends on how you cash flow, what you're trying to do, all the things like with Sean's described. For Chris, he's super diligent about paying everything back. He doesn't mind having to pay back a line of credit the way banks want their money, which is structured. It's every month, it's a certain amount, it's getting paid back over a certain period of time. Whereas like for myself, I have 4 policies, but all of my loans, we pay some back structured, we pay some back unstructured. Some of them just paying the simple interest on it because I have more choices when I'm the one that's in charge of what that loan looks like, and that's through a policy loan. So
the cash value line of credit is going to feel more like a traditional loan in that sense, right? Is that what you're trying to get into? Yeah.
Yes.
Okay, we still have a lot of questions. I don't think we're going to get through all of them. So, Knights of Israel saying, can you use your policy for IBC after your premiums end?
Yes.
Next.
Cool. And can you have your death benefit be paid to different percentages to different people?
Yes.
You define the beneficiaries, Knights of Israel.
Okay, and then Matthew Diana came back and saying, thanks for the information. What bank do I need to look at that will do this?
So Matt, just shoot me a message and I can get you connected with Brandon on our team. He's got some connections at different banks and we can get you set up if that's what you're looking to do.
So yeah.
Okay. And do we believe we need a separate term policy as well along with an IBC policy to cover all bases?
Yes. I mean, at the end of the day, the IBC is a way to take over the banking function of your life. But the reality is if you still have a need for income protection for your family, the term insurance can be a cheap way to do that if you can't get the death benefits you need to do everything. Now, the thing is, we typically will talk about getting a convertible term policy so that even if you start with that convertible term, over time, you can turn that into whole life. But I do believe there's a place for both of those so that you can cover the death benefit protection of your family on the income side, and then IBC becomes your banking function.
I love the convertible term strategy.
Yeah,
it's really powerful, man. It's really cool.
It helps us solve a lot of things. Like if someone says, hey, for my business, I need this much coverage, they can get converted and they're healthy now, you get convertible term for a period, 10 or 20 years or whatever it is. If someone says like, hey, I want to start with my kids, and that's really where they want to start, but they want to put a certain amount on their kids, but they don't have enough life insurance on their body, the way that kids policies are developed, you can put a convertible term on the parent that doesn't cost a whole lot. They can convert it later, but they can still start setting up their kids for the future the way they want to. We always say protect the parents first, but convertible term gives us more flexibility to help you achieve your goals.
And then just on the topic of those cash value lines of credit, shouldn't we want to make sure those are non-direct loans so they don't take away from the cash value? Please confirm the credit limit. It's not touching the cash value, right? It's just collateralized.
That's correct. So the nice thing is if you have a direct recognition company, the cash value line of credit is a good way to keep your dividends not impacted by a loan, because the bank is just simply using your death benefit as the collateral, and then they'll give you the loan. So it's not impacting your dividend growth. So it doesn't matter if it's direct or non-direct when you do a cash value line of credit. It's all treated the same.
Because ultimately, it's almost like your policies aren't even touched. You're not taking and you're not even borrowing against that policy in the way that we normally would.
Yeah, they're putting a collateral assignment on. So if you were to die or pass away, the bank is going to get paid back whatever your loan is, and then the rest of it would go to your family. So it's a really awesome piece of collateral for the bank. They know that eventually they will get paid.
Would that show up as like an open debt though to somebody, like the cash value line of credit?
What was the question?
Like, would that show up as like somebody's debt? You know how sometimes we say the benefit of borrowing from the insurance company is that those don't show up on your credit reports or anything like that. Does the cash value line of credit that does show up as like debt on your?
That's a great question. I'm not sure the answer on that one. We could ask Chris if he knows.
Okay. We'll do two more. So we'll do I were to do a dump in and I receive 90% of the dump in after 30 days, or will I receive 90% of the dump in after 30 days? Also, can I take out a loan after a year? For example, if he does $420 a month times 12, so he's putting in $5,040. Will $5,040 be available or only a certain amount?
So Jabila, it's not, we can't say it's going to be 90% of the dump in. It might be 80 to 90%. It's going to depend on your ratings and all the different things, but it'll be somewhere in that 80 to 90% typically. I like to tell people 80, just because rather under promise, over deliver. And as far as like if you're putting in 420 and your premium is 5,040 in year 2 of that amount, depending on the structure, it'll be maybe 70+% available of that in year 2. And I see Craig nodding, so I know that that's fairly accurate. Year 2, you're usually 75% available, depending, again, on all the other factors of the design, the dump in, those things. So
I agree with those numbers. I mean, I do typically commit to the 90% because it's the 90% is a lot of that's going right into the cash side, but like Jason said, that could vary, so plus or minus, but that's pretty close. And I'm spot on with that 70% number year 2. That's pretty close. So any new money, you can then take that out within 30 days, anytime there's new money coming in.
And Kelly, I don't know if I accidentally said he. Kelly is a girl. So Kelly, she is saying, is there anything I need to send you prior to my appointment? How do we like to set up, like, she's got a call on the calendar. What should she bring to her appointment?
I would say, and I don't remember all the details that Kelly shared earlier, but, if there's debts, we'd want to know those, kind of what your cash flow looks like, income minus expenses. What are you saving? What do you have in savings? And just kind of get a mapping of your money situation.
financially weigh in, list all the income, what are your assets, where you have savings, where are all the kind of the positive things, and then also what are your expenses. We don't need to know that, but just so you know, and then your debts, if you have any, what's the interest rate you're paying, what's the actual monthly amount, and then how much are you actually paying. Like those are the things, you bring those to a call and an idea of where you want to go and what you want to do.
Yeah, and I think just coming with some of those short-term and long-term perspectives of sharing that with us is to say, hey, long-term might be a legacy thing. This is what I want to leave to my family, and this is why, and just kind of, have a discussion about your objectives, and then we'll figure out a way to stitch all this together.
That she wants to do probably more of that income replacement, wants to travel, ready to move on.
And the other thing too is just to understand your investment strategy. What do you invest in? What do you know, like, and understand? Because that'll help us figure out how that can be paired with your investment strategy.
Okay, and then Ron is saying, if I wanted to join the team and become a money mentor or join a team like it, how do I do that?
You got to buy a flamethrower and learn how to play guitar.
Learn how to snowboard.
we do work with agents that want to promote and train and teach the infinite banking concept. We have a lot of resources and support behind that for the right people. So if you'd like to explore that, a couple pre-qualifications. One, you have to have a policy, an infinite banking policy that you're actively using, and preferably with us, so you've been through the process, but not necessary. And number two, you need to be licensed as an agent and as a life insurance agent. And then three, you need an ability to generate leads and generate clients. And if that interests you, then I'll post a link over in the chat that you can complete a form, and we'll be in touch with more details. Fair enough.
And we made it. We did it.
There are 2 questions, and I hate leaving them, but come back next week.
Come back next week. All right. I'm going to call Johan.
All right. Thank you all for showing up.
And we'll see you next week. Come back with all your questions.
All right. See you guys. Have a great day. Bye.
You too.